tonight. In exactly 1 minute, we will start tonight's webinar, guys. We're going to talk about some really interesting topics, hot topic that we all have been hearing in various media, social media platforms, news, property forums, newspapers. So, and meantime, there is a lot happening here in Queensland also. So, we'll talk about Queensland property, how it is performing, how it is going to perform in the next few years leading up to Olympics. So, some really great content tonight, and I hope that it is all useful for you and you can use this information that I share tonight for your benefit and for your future as well, like from an investment property journey perspective. Okay. Good evening, everyone. Let's start. Jai Sri Ram, Jai Hanuman. Good evening, everyone. Welcome to our webinar. This is going to be a very informational and educational webinar. Yes, we are buyers agents, but I am not here to pitch or sell anything to you. I will start with a very small story. I had a client who came to me, a potential client who came to me in 2024, but he became a client, of course, since afterwards, and he was struggling to buy an investment property in 2024. He has been searching, placing offers, doing open homes on Saturday, Thursday night, missing out. Anyway, after all that struggle, he came to me and he said, Anand, I want to buy an investment property. And he gave me a big list of requirements. But as part of the process, what I do is I sit with that client and we strategize. So, of course, he gave me the requirements, but asked him, Dushinda, what do you want to achieve from your investment property? And during that process, I came to know that he had purchased a property for 960,000 in 2019 or 2020, and he was very proud about it, and I was also very happy that he did that. And he was very proud that, Anand, you know what, this property is now worth 1.7 million. See, I have already gained 60-70% last 4 years. So I subtly told him, Dushyant, if you had come to us in 2019 or 2020 with 960,000 or $1 million, I would have purchased three properties for 300,000 each. That was the value of those properties there. There were some really good growth opportunities at that time, at that purchase price, and those are all now valued at 850,000, 900,000. So you would have gained, or your property portfolio would have been 2.5 or 2.6 million. Yes, now you are sitting at 1.6, 1.7 million, but you didn't realize that you are on an 800,000 loss in the profit. So that is what a lot of people don't realize. They think, okay, I have made money, but they don't realize how much they could have gained more. Okay, so it is not about just buying anywhere, it is about buying in the right locations, because I have seen people losing 50,000 to $100,000, not because the property market went down, it is because of not taking action or delaying property decisions or investing in a wrong location or a wrong property type also, buying some shiny properties, all that shines is not gold. Okay, so we are, as I said, buyers agents, we are experienced buyers agents, and we are not someone who mushroomed in the last 12 months. This is our 10th year as a buyer's agent buying investment properties, and over those 10 years we have purchased 500 plus properties. So here I am tonight going to share some right locations for you to buy, some high level strategies. I have allowed some 10 to 15 minutes questions as also at the end of the session. You are welcome to post any questions on the chat box. Mute your mic, but you can put questions in the chat box. Who's the photo you are seeing with me is Paras. We both work together as buyers agents within Guru Property. So Paras will be answering those questions on the chat. Again, mute your mic. At the end of the session, you can unmute and you can ask any verbal questions. So, okay, let's start. This is my team in the photo, which is we took only a couple of days ago. But what you are seeing is just half of my team. So apart from me and Paras, there is a big team behind me who can help you to achieve your goals. You can see Alan, who is the second right from the photo here. He is part of our PM team. He has got 30 years plus experience in property management. He will send his contact details in the chat box. You can contact him separately and ask any PM questions. Don't ask any PM questions here in the chat box. Only ask questions that you are seeing on the screen, which we will be covering tonight, which is we're talking about, going to talk about impacts of May after May 12 budget, pros and cons of new build established properties, why you want to buy in Queensland, why now, what are the fundamentals. We're going to talk about 2032 Olympics, and also last but not the least, where to invest in Queensland, some hotspot areas, metro Brisbane as well as regional Queensland. I hope you will get some clarity. I'm sure you will. It's not hope. You will get some clarity about why to buy in Queensland, where to buy in Queensland after this session. If you still did not get any clarity, means please contact me separately. Thank you. Let's get into it straight away. Okay, one thing I want to say is I'm not going to cover SMSF tonight. In the registering sheet, a lot of people had requested me to talk about SMSF. There is a lot of content here today. So that is what you are seeing on the screen here. We will cover those things. SMSF, again, we will cover some other night, or you can ask me after the session. Okay, thank you. Let's get into this. Budget changes, you already know what the changes are, so I'm not going to repeat that, but I will talk about the impacts due to these changes. Right, so first is negative gearing. Two major changes, as you know, negative gearing and capital gains discount. Right, so first, we will cover the negative gearing, and we're talking about impacts from a Queensland property perspective. Okay, it is not general, it is specific to Queensland. So when this negative gearing was abolished on the 12th of May, 7:30 p.m., it was designed in such a way that they want to help home occupiers or first home buyers, and they wanted to discourage investors. So the investors don't buy property, so it will help uh, home occupiers to buy. That was the intention. But what is happening here, or what is most likely to happen, is investors or existing investors are very, very less likely to sell the property, because if they sell the property, they will use the negative gearing benefit. So they won't sell, and if they don't sell, what will happen? Supply tightens here in Queensland. Already demand is very high, so supply is going to be already less, and which is going to put pressure on the prices. And the rental supply shrinks. Why? Because only smart investors will buy property. Now what, uninformed, I'm not going to say that people who are not buying properties are not smart. What I'm going to use word is uninformed or less informed investors will not buy property, thinking, oh, I am not going to get negative gearing, so I am not buying. So what will happen when investors are less? Rental supply will be less, it shrinks. And when rental supply is less, rent prices are going to increase further, which we have already started to see in many areas. New builds are going to become pricey because new build demand is going to increase, because again, uninformed investors, what they think is new build is very good because I can claim negative gearing, I can claim depreciation. So they just think from that perspective, and they think or assume that new builds are good, and demand increases. And when demand increases, price increases. New builders, developers have already started to jack up the price. Okay, and once built, the prices go down as per market, because price new build always come at a premium price compared to a established property, which we will see in an example in the next few minutes. Okay, so price comes down, and also it has got a small land component. So these are some impacts due to this negative gearing due to budget. Capital gains discount 50% Gonski. Long term, there will be more investors who will hold on to the property. They will all be long term investors. Flipping short term will be gone. I myself had a lot of investors who bought properties through me in view of renovating and flipping. Those kind of investors will not be there, because it will not stack up from a profit perspective. So again, stock will be less. There will be investors, of course, are going to hold the property longer. So less turnover and less supply. Demand in Queensland is already higher. Supply of new houses are there, but they are not going to build houses overnight. It will take time. It is already taking time. And many people who want or moving into Queensland, they can't wait 6 months or 1 year or 2 years to move into their property. Many can't wait. So again, they buy established properties. So established properties demand, of course, are increasing, which is going to put prices up, right? So I know some investors, they think, okay, negative gearing abolished for established houses, I will lose my negative gearing. So like, if we'll be doing some numbers in the next few minutes. So usually an average tax refund for a standard 422 is $3,000 to $4,000 a year. Okay, so if you think that you want to save that money, one strategy that you can use is put some extra money into your super, and that will help to save some tax easily, and you can buy under SMSF also. That is one strategy you can use. And one thing, last but not least, is this: all these changes that have been done after May 12 can be reversed after next elections. And what will happen then? All the investors, everyone will come back to the market, and the prices are going to surge again. Again is the key. Okay, so every month of hesitation is costing money to you if you don't invest. Okay, so next, we will look at new build versus established. I am not here to say which is good, which is not good. I am only here to compare new build versus established. You are all very smart investors, I believe, so you can make your own decision. If you are unsure, you can contact me. In the next couple of slides, we will go through the pros and cons of each of them. Also, new build negative gearing is available. You can claim negative gearing in the same financial year. Established property, it is you can't claim in the same financial year. It is delayed. You can nullify against the positive. When the property becomes positive, you can claim those negative gearing. So you are not losing any money. It is only delayed. Okay, capital gains, yes, there is a choice between 50% discount or new indexation in the new build. In the established, yes, that 50% is a gone ski and it is replaced by a minimum of 30% and new indexation. So that is why it is very important for you to see when you want to sell. You have to calculate generally, the more you hold the property, the less capital gains tax you pay. Depreciation is available in new build. You can claim anywhere between $8,000 to $10,000 deduction. Lot of investment companies, big companies, they will lure you to new build saying that you can claim $10,000 to $15,000. What you think is, oh, I will get $10,000 to $15,000. No, you can claim deduction. Okay, so again, established property, you're not losing those depreciation, it will be delayed only. Location, yeah, new development, new build happens in more in the new development area. There will be a lot of supply where these new developments are happening. Some of these projects run into 5 years, 10 years, 20 years. Also here in Brisbane, we have got an area called Yara Bilba. That is a 25-year project. Ripley here is a 15 years project. Stockland is doing. So you are always competing against new properties for selling or and also for renting in a established thing. Property, you've got wider option, proven suburbs near to school amenities and all that. Entry price often higher, in case of new build. In an established property, you can buy older properties with a bigger land component, with view to renovation, adding value. You can put granny flat because usually the land sizes are bigger or larger. Stamp duty, in case of new build, you only pay stamp duty on land, but there is a build time. It may take 1 year, 2 years. So you have to pay mortgage for the land. You also have to pay mortgage for those progress payments, right? In sorry, the property is not right property, right location, or the right strategy. At least in an established property, okay, I am buying for 700,000. You know that you are going to get rent from tomorrow or 1 week later. Worst case scenario, you are going to know. You will know that okay, this 700,000 is going to fetch 600 per week rent. Okay, this is my holding cost. So you can do all those
And just
calculations.
not there from 7 to 13 July. That's what.
Can everyone mute their mic, or did someone tell me anything? Okay, I'll keep going. Um, right. New build pros and cons. See, I am not here to say, I'll repeat, I'm not saying that we are only buying established property or you only buy established. No, we also buy new build properties. This is a photo of me from 2018, 19, where I had more hair, more black hair also. We're doing a new build for a client. Okay, so we'll go through the new, pros and cons in the new build. Yes, full negative gearing, retained, you got better cash flow, definitely. You've got choice of capital gains tax, maximum depreciation possible, lower maintenance because it's going to be newer house. You've got all the warranties in place, all happy days, and possible better borrowing capacity also. I'm hearing from a lot of clients that their borrowing capacity has reduced after the May 12 budget because the banks are tightening the screws for established properties and new build. You will have better borrowing capacity. So that cons, of course, you are going to pay a premium price. It does not come cheap. You are paying also to the developer their margin. It comes from your pocket. Construction delays happen. Yes, there is cost blowout may also happen. You don't know how much time it is. Usually, many big builders they deliver on time, but there is always some element of risk. Definitely, often in the outer growth corridors, right? So I'll show you an example where we've recently bought a new build. Yes, land component is smaller. You're not able to do granny flat, those things, add value type stuff, right? Oversupply risk is always there. You have to buy in locations where project size is small, less number of years, where the area is small. There's already infrastructure development happened or happening in the next 12 months or 18 months, right? So you're always competing with the new houses if the projects are big. So you have to look at those things when you before you jump on to new build. Okay. So this is an example of a new build that we are done for our client recently. Baram Heads is part of uh, Bhavi Bay. See, I told you I'm not against new build or I'm not pro with established. You have to just look at all the aspects. Key here is purchase price, the location. You can't just go and buy anywhere because, oh, okay, hey, I'm getting negative gearing. Hey, I'm getting depreciation. No, you can't do that, right? So you look at whether small project, less years, this one, see, we looked at the location. It is near to Harvey Bay, not near to Harvey Bay, it is in Harvey Bay, near to the waters. I mean, it is already going to fetch 650 to 700 per week rent for a 750,000 property. You can convert this into Airbnb also, and we can get 1,000 or even $1,200 per week rent. So important is location. The bonus in Harvey Bay, which we'll talk about in the growth suburbs, is tourism. Okay, so this is an example where new build you can do. Established property pros and cons photo. We've got Paris along with a client. This property we purchased a very upmarket location, large parcel of land near to railway station, good schools. This client can do renovation or he can do granny flat also. So this is a very big advantage of established property. Yes, proven suburb, higher land. You can manufacture growth. Vacancy. We look at vacancy where less than 1% or 1.5%, and rents quickly. Right, so low managed risk. You, as I said before, you already know when you are signing the contract that what is going to be the purchase price and what is the rent. So you can already do your calculation. If you don't know to do calculation, contact us. We've already got tools in place which will tell you how much a property is going to cost you over a 5 year period, not just 1 month or 1 year. 5 years you will know, okay, this is what it is, right? So cons, of course, is cash flow impact, and that is why if you do calculated risk, you can manage your cash flow also. Yes, there is possible impact due to capital gains tax, right? No less depreciation or no depreciation for a property this that you are seeing in the photo. There is zero depreciation. So did we not buy? So you don't buy just because of depreciation or negative. You look at capital growth long term. What you can do? What is your strategy? Right? Yes, older properties may have higher maintenance. Okay, I will tell you there is no property that has no maintenance. You must allow some money every year for this. Whether it is happening or not, that is different. You should allow some money in your kitty for a property, right? So always look at capital value and not operational cost. Yes, operational costs are important. Take those calculated risks, right? Yeah. So nowadays, okay, I put this screenshot because nowadays, whatever I do, I need to provide evidence that it is not coming out of Chat GPT. See, this date here is 20. In fact, it was I did this in 2017, 2018. We migrated our data from Google Drive to OneDrive. So OneDrive we migrated in December because quiet time 20. But anyway, just assume I did it in 2022, not Chat GPT, right? So all these things I've already done before. Right. In Sydney, I did a seminar, and in the seminar, I had a graph of, all the projects in all states, and I was comparing state-wise where there is major projects and all. And we had spent a lot of time, money, energy in getting those kind of data to provide that one slide. And this one person who was attending is already one our client. He's already purchased two properties. He called me after I came to Brisbane Monday. He called me, Anand. I came home and in fact, I took the photo of that slide and I came home to check and I checked with Chat GPT, and the figures did not match, Anand. Oh, so I said, bro, so you mean to say that my data is wrong, or you are saying Chat GPT is wrong, right? So then I had to provide him evidence that my graphs are all right. This is, I actually have to give him the source. So don't go to Chat GPT all the time. My 15-year-old son, the other day, he asked Chat GPT which month has X in the month, and the answer came was February. Right. So Chat GPT is good, but it is not always accurate. Always refer to the source where it is coming from. Okay. So this is to prove that whatever I'm doing is not from Chat GPT. That is something I have to do it. There is no option. All right, now I'm going to give an example of established and new property in the same location. The right side you can see is established in Gatton. I'm comparing both same areas. 749,000 new property, 834,000 offers over 749. I am more than. Hello. Please mute your mics. I'm more than sure, 100% sure that I can negotiate better than 749, but I have put 750 in. I will show you the numbers in the next slide. 750, and here it says from 834. Okay, from 834 means once you go to the builder, you will add one or two items. That's it. It goes up to 850,000. Okay, so same area, same land size also. In fact, this one is 5 bedroom. $100,000 difference between a new property and established property. This established property is established old, but see, it is all renovated nice. Okay, so next slide we will go through the numbers to say which one is good or bad. It's not good or bad, it is numbers, comparing the numbers. I don't know whether you can see it clearly in the screen, but I'll quickly tell you the new build out of pocket over 5 years is new build is 23,000 out of pocket over 5 years. Okay. And in established, it is around 37,000 over 5 years. So what it means is around $2,700 per year out of pocket more than established home, right? So that seems to be correct because I told you standard 422 negative gearing and all that tax refund will be $3,000 to $4,000. Now we'll do the numbers. 100,000 you've already paid more for the new property. So if I'm taking the 37 minus 23, $86,000 is what you are paying more for a new build, and it is over 5 years only. So that is a basic difference, right? I'm not allowing for CGT or granny flat and all this and all that stuff, right? So next, comparing an area with the next area. Okay, so new build established, but different location next to each other. We call it ripple effect. So Ripley is a very good location, fantastic location, lot of new development. Stockland is developing there. They're getting a new station also, new schools, good for families, beautiful. 350 was a 356 block, 988,000, almost $1 million, comparing to Yamato, very next to Ripley. There is also a new station coming there, $150,000 less, and it is a 1,000 square meter block. You can do some renovation, add value. You can do duplex behind. You can do a granny flat. All that can happen. Okay, so what I am saying here is not just go and buy this property in Amato. I am also not saying that don't buy in Ripley. Okay, I'm just comparing. Okay, it may or may not work in all the in your situation or all areas also. What I am saying is you want to see what you want to achieve out of the property. Okay, you need to assess the locations. If you think, okay, due to ripple effect, it will grow, that may not be, because I have seen areas where one suburb is growing exponentially and the next suburb is just still, it is not growing at all. So not all the time ripple effect may work. Okay, but I'm happy to provide you the advice on how you can make those decisions. What are these criterias? I can do that for you. The example I am giving here. Okay, right. Um, this is again, see the photo I have put here is, of course, it's me, right? This is Queensland, right? You've got the lifestyles, the water, the beach. At the same time, there is good jobs also. Tell me one state in this country where there is fantastic lifestyle, beautiful beaches, and also jobs. Right? If you are in New South Wales, Sydney, yes, beautiful area, fantastic area, good jobs. But what is their lifestyle? Look at that. I'm not saying lifestyle is good or bad in New South Wales, but you have to assess that. But according to me, Queensland has got all those boxes ticked. If you take Tasmania, for example, beautiful Tasmania, right? Tourism is good, nice. But are there jobs there? Can you get sustainable income there? That is what you have to see, right? So lot of investors fail or are not successful because why? Because they are confused. Okay, should I buy now? Okay, if I buy now, what will happen? Where do I buy? What type of property should I buy? Oh, my friend said to buy this. My wife says, oh, buy here. My neighbor's friend made a lot of money in this area. Shall I buy there also? There's a lot of confusion. And plus, adding to those confusion is there is a lot of media talks. There is too much of noise. What are those noises? You're thinking about capital gains tax, interest rates, recession. Huh? Then there is negative gearing. Huh? Oh, I will lose money. Oh, I will lose my job. Oh, AI is coming here. Oh, I will lose my IT. It's a lot of things. But people are forgetting one thing. There is a major event happening here in Queensland, Olympics. No one is talking about Brisbane Olympics. That is the big elephant dinosaur sitting here in this room, and no one is seeing it. Okay, so what is happening? See, because I'm not saying the property is growing just because of Olympics. It is icing on the cake. We are experiencing 100,000 more people coming year on year. It's the largest interstate migration in Australia. Vacancy rate is all time low, less than 1%. Okay, and supply is very less, right? We need at least 50,000 houses to be built, but we are building only 30,000, and that is also getting delayed. And annual growth is almost 10%. And this is only this 10 to 12% is what we are going to see for the next 5 years. I will tell you exactly why I am saying 9.6% or 10% with examples. Okay, and Sydney, a lot of people, Sydney Olympics, you may or may not know, property prices jumped significantly 3 years before Olympics and 2 years after Olympics. And here also in Brisbane, there is going to be a surge in demand and surge, major surge in prices after 2028, 2029. Okay, so this is the time to buy is my belief and the belief is, and this is a once in a lifetime generational opportunity. Okay, so these people say, oh, Queensland has already grown. Okay, I'm not investing in Queensland. I'm going to buy in Tasmania. Not many people know that Tasmania has also grown 30-40%. Okay, will Tasmania have sustainable income? Wherever you are investing, even if you are investing in Brisbane, Queensland, think whether will I get sustainable rental income? Will I be able to sleep peacefully at night? Okay, here I am giving you a blueprint of the growth timeline from an Olympics perspective. So, pre construction phase 24 to 27, people are accumulated, lot of quiet accumulation happening. Games are already priced in, right? That is why people say Queensland has already grown. Yes, it has grown because we have already priced the pre construction phase. Now, the next phase is construction phase, boom phase, infrastructure build. It is going to accelerate the demand. We are expecting 8 to 12% growth year on year in those 3 to 4 years. Okay, and 2032 is the game's peak year. Okay, that is when you make a decision whether I want to exit or hold. That is not the time to buy property. Now is the time to buy property. 5 years later is your decision to exit. Okay, and 2033 plus, that is why I put this arrow down. Manage your risk. There may be a correction. I'm not saying there will be. There may be a correction, and that is where you make informed decision uh, uh, what to do with those properties, right? Consequence of waiting. Okay, I'm not here to say buy from me or buy now. I want you all to think and ask yourself a question. What will happen if you don't buy? Okay, if you are already thinking, if I buy, oh, I may lose money, oh, what will I do? Now think, what will happen if I don't buy? Okay, if you don't invest, what will you do? You are just going to do your usual 9 to 5 job. You are going to drop children at school, look after the family, huh? And life keeps going. After 5 years, you will suddenly realize, oh, what will I do now? How am I going to fund my retirement? That time you will say, hey, I've got super money. Then you see your super balance. Super, I will tell you, your super money is only going to fund your daily milk and daily bread. That's it. I have got a client. I was just speaking to him a couple of weeks ago, 53 years old. His balance 400,000 in super. His planner has said it will become 700,000 in 7 years. Okay, 400 to 700. I asked him, is 700,000 enough? He said, no, Anand, no. then what are you doing? So then I, kind of, I didn't push him, but I recommended him to look at SMSF, and he can build a proper portfolio of 3 to 4 properties. Okay. So just sitting in your couch is not costing you any money. Yes, it may cost your Netflix subscription because you are watching, sitting in the couch and watching Netflix, right? It is only costing you $30, but it will be expensive in the future. Expensive what? Netflix is not going to be expensive, right? Not doing anything will be expensive, right? So I want you all to be uncomfortable. Right now, you have to be uncomfortable. Only then you can be comfortable later. I'll tell you, if you are now listening to me and you have only 1 or 2 properties or 0 properties, I'll tell you there is a big reason for you to worry. Okay, if there is no investment property, what else will you do? In see, if, in India or Southeast Asia, there is a lot of stock market investment. There is SIPs. There is term deposit gives you 7 to 8%. Here in Australia, there is nothing other than property. Yes, you can invest in shares, but shares are high risk until you know where to invest, how to invest, and you cannot leverage also in shares. Okay, so these are a lot of issues, right? So I know that there is going to be a major surge in demand around 29-30 for Olympics. So average growth is 8%. It is very conservative. So waiting now on a 700,000 property, you're already losing 50 to $60,000 every year. Okay. And if you think I have got enough savings, then this inflation is going to eat all your savings. Okay. Right. I hope it's covered. Now come to the important part of our webinar, which is growth suburbs. Growth one suburbs, Ipswich to Toowoomba corridor. I've circled here some suburbs that are good for investment. We are expecting 10 to 12% growth year on year for the next few years. Balloon, Taguna, Rosewood, we can buy from 750,000 onwards. Then Toowoomba entry price is 720,000. Capital growth 12% year on year. New hospital coming in Toowoomba, inland rail. There's a huge health care worker demand happening, huge construction happening. There is direct Olympics demand also. Is new stadium happening there as well. Suburbs 5 to 10 kilometers of Toowoomba city, focus on older type property, decent size block. You will not go wrong. And I said 720. You can try from 700,000 or onwards also. Negative gearing, yes. You'll probably be to 200 $250 out of pocket. Growth suburbs to Logan to Gold Coast corridor. I did a webinar 2 weeks ago. I spoke about areas like Jimboomba, Flagstone. They are still good, but now there are some really good opportunities available in Marsden, Crestmead. Believe it or not, in the last 1 month, we are able to get some good uh, prices in these areas. We were not getting anything under 850,000 before, but now that is possible. So there is some minor correction happening. So this is the time to jump in and cash in on the correction. I am 100% sure that these properties will be in the $1 million in less than 2 years or close to 2 years, because currently the fundamentals have not changed. Nothing has changed. What has changed? The sentiments have changed. That's all, right? There is still the Kumara connector. There is still Olympics commitment. Gold Coast growth is happening. Crestmead logistics center is $1 billion. There's a big demand in rental. Supply is less. There is no new areas, by the way, new development in these areas I have mentioned. So there is no way there is more reduction happening in price in these areas. So good locations to buy. Growth suburbs to Moreton Bay, to Sunshine Coast Corridor, Caboolture, Elimba, Murrayfield, Petrie, right? Olympic League infrastructure, like again from 800,000 onwards, you can buy Harvey Bay, my favorite location, Harvey Bay, Scarness, Point Vernon, entry from 700,000 onwards, right? It's a family style location, owner occupiers, there's new jobs, Harvey Bay Hospital is getting upgraded, is $8 billion committed there already on train building factory. There's around 4,000 jobs, 400 million committed on the hospital in Harvey Bay. The airport is getting upgraded there. There are these are just some projects that is coming into my head. I've just spitted here to you, right? So a lot happening. Gympie, which you can't see in the map here, 1 hour from Harvey Bay. Again, strategic location. Okay, it is a midpoint between Sunshine Coast and Fraser Coast. North of Sunshine Coast to Noosa, you can't get anything under 2 million, right? So Noosa is just 30 minutes from Gympie. So people who want to have the lifestyle of Noosa, right, buying in Gympie, right? So Baram Heads, if you remember that new build that I showed you in the slide, is in Baram Heads. See how near it is to the water. That is why I said you can do Airbnb there also for 750,000. So these are some no-brainers. Okay, Townsville, right? So yes, it is a regional location, but I call it high energy town, right? This is a frequently asked question I get. Already, Townsville is already grown X%, 20%, 40%, 50%. Will I get growth, get more growth, right? So yes, why you is there's a lot of projects, defense projects, healthcare, tourism, of course, is a bonus, right? Some of these suburbs like Bold Plains, Mount Louisa, Bushland Beach, Mount Lo. Yes, we have to be careful in these areas before buying, right? Because of the storm impact, flood impact. But see, we as buyers agents, we bought I think 40 to 50 properties in the last 12 months alone in Townsville. None of them are in the flood zone. Okay, even when we had the 22-23 flood event here, I put in my Facebook or in my social media that 100% of the properties we have purchased zero flood. Okay, that is how our track record is. There is 50% of population growth projected in Townsville alone in the next 10 years. Where are these people going to live in Townsville? So that is going to put a lot of pressure in the suburbs, in the property. Definitely, Townsville. The last but not the least, we have got another high energy town of Rockhampton, Bundaberg, Maryborough, right? There is a big list of major projects in Rockhampton. Is around 9,000 jobs expected in the next 10 years. So imagine how much the population will be. Olympics rowing avenue happening in the Fitzroy River. That is why I have cycled. How many people in here you are attending know about Fitzroy River? Not many, right? But after Olympics, every second person will know about Fitzroy River. What will happen then? People all will come there. Okay, so it is a small things that bring the area into the radar and demand is created, right? So Bundaberg is one of those three. There are only three hospitals hospitals, major hospitals getting built in Queensland. One of those three is in Bundaberg, right? When government is investing billions in a hospital, that area is going to have major population growth. Okay, Maryborough is very similar to Harvey Bay, the Fraser Coast region, right? Now people go, if you anyone wants to see Great Barrier Reef, they go to Airlie Beach or even Cairns and all that. But I will tell you, after Olympics, people will start from Rockhampton, right? Because of the Fitzroy River. Okay, it will come into the radar. Right. Okay. So I am on time. In fact, I am not only 3 minutes late, which is very good. What I am doing here is you can scan this QR code and you can have a 45-minute one-on-one call with me if you have got questions. What we will do is we will review your position, borrowing power. We will understand your goals, we make a timeline, right? And then we will come up with a one page action plan on what can be done, how we can come to say, if you say, Anand, I want $10,000 rental income in the next 10 years, we will come up with a plan to achieve that goal. If you say, Anand, I want 15 million to achieve in 15 years, okay, what do you need to do for those? We will create a plan for you. You can scan this QR code or you can WhatsApp this number. Reva, you can put the feedback form in the link you can put here. Okay. Everyone, if you can please fill the feedback form, that is very important. Um, Reva, you can put the link to the feedback form in the chat so people can click on the feedback form. And yes, so please click on that link and please fill in the feedback form. That is very important to us. It will only help us to help you better from a content education point of view. This is very important. So scan this code for an action plan if you want one, right? And we are also providing this webinar offer for tonight. Usually our fees is 1399 or 14,000. We are offering only for tonight $9,500. It is only for the first three people. Sorry about that. That is what it is, and it is only for tonight. If you ask me, Anand, after 1 week, if you come to me, Anand, I attended your webinar, please give me webinar offer, I will have to say sorry. There is some property management services also available as end of financial year deal. You can contact us for property management services also. You can talk to Ellen if you need PM end of financial year deals. We are doing something for that, right? So what we will do is, we will come up with that one page goal based on your profile. We will have a investment blueprint. Okay, we will suburb shortlist, property sourcing, due diligence, everything, and we also have post settlement review to see how things are going. Are we achieving the goal for the next year? Okay, so it is only suited for people who are ready to buy now, or busy or confused professional. Lot of I let's be honest, lot of people are in a very confused state, right? Oh, I don't want to buy. Oh no, I am worried. See, when people are greedy, that's the time to exit. When people are scared, that is when you buy. Okay, so anyone needing a clear Queensland acquisition roadmap, just WhatsApp this number with Acquire. We will help you do that. Now, I'm happy to take questions, or if you put anything in the chat and if it's not been answered also, we can do that. You can unmute your mic and we can answer. We've got 8 minutes, guys. So exactly at 8 o'clock, I have to finish. So 8 minutes. I'm happy to take questions. Paras or I, we will answer. Thank you. Any questions, anyone?
Hi, Anand. This is Hardeep here. Uh, I just want to check, if I have to contact you, what is the best way to contact you later? So do I have to call this number?
Yeah, so or you just scan that QR code or just WhatsApp that number that you are seeing on the screen. We will help you organize that session.
Okay, okay. Yeah, I'm looking for SMSF new property to package it, in a single contract. So I'll contact you. Yeah.
Yeah, yeah, we can do that. Yes, yes. Can you give an example of the goal session? Yes, definitely. Vinay, if you want to just send me your email address, I can send you a generic one. Otherwise, you tell me what you want to achieve in few lines in that email. I can again provide some high level. Action plan that we can do for you. Huh? Are there any properties under 850,000 in Southeast Queensland? 1 or maybe 2 months ago, I would have said no. But now there is a little bit of possibility, little bit of window to buy under 850. Definitely next 2 months is the crucial month, I believe. From spring onwards, I am expecting a lot of buyers to spring back into action. So to answer your question, yes, there is possibility of that. Yes, Sally, you pointed. Sally is saying you pointed Yara Bilba in the location map, but didn't speak more about it. See, what I said about Yara Bilba is Stockland is developing. There is a big supply of new houses coming. So when I was saying when you're buying newer properties, you should see the size of the projects, the number of years that are remaining in that project. Those things matters to come to a decision whether how much capital growth you can achieve, right? So Yara Bilba, I'm not saying is a bad location, but there is a lot of supply that is coming in the next many years, and there is no plan for transport from Yara Bilba to Gold Coast or city. So that is a question mark, and that is a big, what do you call, not a big problem, but that is a problem among a lot of people moving into Yara Bilba. Uh,
Hey,
Vivek,
Anand.
yeah, see, you are not paying 9,500 now to me, by the way. Again, contact me and I will tell you how the structure is. Huh? Uh, eh, you are only paying an initial 20% to us. Okay.
Hey, Anand, this is Aditya here. I just had a question on the new builds, right? So again, all the strategy which you have, right, for the established houses around the supply, rental, and all those things, do those factors also actually apply to the new builds? And then
Of
accordingly, you
course.
suggest the areas for new builds and
Of course, I gave an example of Yara Bilba. Now, that is an
yeah.
example of you can get new builds in Yara Bilba, and there is a lot of supply there, right? So, an informed decision had to be made whether you want to buy in Yara Bilba or maybe a location like Crestmead, which I just told you also, right? An older house in Crestmead with 600 square meter block. Probably the price will be the same. Okay, so very established location, Christmas, good transport, proximity to Gold Coast. So you have to look at those things. Normally, how old houses are recommended? See, there is no like real rule, Krishna Kumar, that SMSF 10 years or 15 years or 5 years. It is said that not much of a maintenance for SMSF properties, because SMSF won't allow you to keep spending on a property in for maintenance. That's what is the minimum amount to decide on SMSF, right? Again, a lot of SMSF questions. There is no minimum amount, but it is recommended that you have at least 150 to 200,000 in your super fund. Okay, what is SMSF single contract? Yes, so in SMSF you cannot have a double house contract and land contract. You have to have single contract. If you have got single contract, the price will increase 50 to $70,000. Okay, because the risk is taken by the builder or the developer. So he is going to put that risk factor into the pricing also. Okay. So single contract is basically one contract. Okay, so you pay only 5% or 10% now, and then the 90% is paid only after the house is complete. It will be, and again, as I said, you pay more $50 to $70,000 for that. Okay, I've got 1 more minute left. Any more questions you can? Otherwise, I can wrap it up.
One more question, Anand. How do you rate, some suburbs around Central Coast?
Some suburbs where?
Central Coast near Sydney. Yeah,
Paras, can you hear?
Yes, I think he's asking about Central Coast, Newcastle. So the topic
Newcastle.
of this webinar is mostly Southeast Queensland,
Okay.
Brisbane and regional Queensland. If you
Okay,
wish
no
to
problem.
discuss any of the regional New South Wales like Dubbo, Orange, Wodonga, Albury, Central Coast, we can have a call later on.
Okay, all right. Thank you.
But thank you for the question. Thank you.
Is it better to build a good development? Green banks very similar to I won't say Arabilba, but a lot of houses coming there in Green Bank. Can we buy land only in SMSF? No, SMSF won't allow you to buy land because you need to show that it is generating income straight away. Thank you. Is buying interest still recommended? Again, it is depending on your what do you call situation, Krishna Kumar. Okay, have a chat with us separately, and then we can help you. But again, it is a decision that your accountant will make you do that. But I can provide you some high level advice. Definitely, should we set an result? Yes, please. Yes, if you don't have any team to do SMSF setup, we can help you to do SMSF setup. Definitely, minimum super balance. As I said, 150 to 200,000. Although there is no regulation which says that you need to have minimum balance, but from a cost perspective and all that, pre-approval, this that, 150 200,000 SMSF balance is required. Okay. Thank you all. That's it. Thanks, guys, for attending. It was a very good session, and thanks for your time. And any questions, reach out to me, Paras, and we are happy to help. Until next time, thank you.
Thank you.